You were working 60 hours a week, drowning in Slack notifications, and your bank account is still flatlining. You chug a $5 cold brew at 6 in the morning to sync with East Coast market hours, stare at a glowing monitor until your eyes bleed, and yet your net worth remains stuck in the mud. Let us stop pretending. Hard work is a cultural scam. If raw effort translated to wealth, every corporate analyst grinding through midnight spreadsheets and every delivery driver dropping off their late-night food order would be a millionaire. They are not. The cold, mechanical reality is that your brain has been deeply programmed with a baseline system that is designed to keep you financially broken. You are operating on a broken software patch inherited from a legacy system that rewards compliance over leverage. Until you rip that code out of your subconscious mind, every single dollar you earn will evaporate into convenience fees, lifestyle creep, and hidden inflation. Think about what happens every single time a fresh deposit hits your checking account. You experience a brief, temporary spike in relief. Then the automated system takes over. The mortgage clears, the car note processes, the credit card bill wipes out the surplus. You tell yourself that you just need a higher salary, a promotion, or a lucky break on a side project. But when you look at the data, the paradox deepens. When corporate professionals land a $20,000 raise, their net worth does not move. They simply swap their standard rideshare for a premium tier, order more expensive items on delivery apps, and move into a slightly larger apartment with a better view of the city. This is lifestyle inflation, a biological algorithm driven by the human urge to signal status within a local hierarchy. Your brain treats money exactly like a 5-year-old child treats a single scoop of ice cream on a hot sidewalk. The kid drops the scoop, watches it splat on the pavement, and immediately screams for a triple scoop cone. But if a biological system cannot manage a single unit of resources, the architecture will collapse when handed 10 times that volume. Capital operates on a fixed law of containment. Until you build a structural perimeter capable of holding liquidity, the market will ensure you remain asset deficient. Let us map out a radical structural overhaul of how capital enters and exits your life. We are burning down the traditional abstract budgeting advice and replacing it with a zero-willpower automated allocation architecture. Relying on your willpower to save money while sitting in front of retail apps designed by behavioral scientists is like trying to hold your breath underwater. You will lose. Instead, you must build a machine inside your banking stack that completely removes human decision-making from the equation. The moment your bi-weekly paycheck lands from your employer or your Stripe payment processor settles your store balance, that capital must be instantly split by automated rules into isolated, hard-coded destination accounts. 50% of that incoming capital goes straight into your primary operational hub. This is your baseline survival container. It handles your fixed, non-negotiable overhead, your rent, your baseline groceries, your basic utilities, and the bare minimum subscriptions required to keep your business or career alive. If your current lifestyle requires more than 50% of your net income to survive, you do not have a budgeting problem, you have a structural income deficit. No amount of coupon clipping or skipping your morning coffee will fix a fundamentally broken income-to-overhead ratio. You must accept that your baseline is too high for your current economic output and focus entirely on upgrading your primary skill stack to lift the denominator. The second container receives 10% of every single dollar. This is your financial freedom account. This money is legally dead to your personal life. It cannot be used to pay for emergency car repairs, it cannot be used to buy holiday gifts, and it cannot be touched when you feel a temporary cash crunch. Its solitary robotic function is to be routed into broad market index funds or capital-producing assets that yield nonlinear returns. You do not check the performance of this account daily. You do not trade individual stocks based on hype threads you found on social media forums. You set an automated sweep rule that buys chunks of the total stock market exactly one day after your payroll lands, completely bypassing your conscious mind. The third container takes another 10% for long-term strategic liquidity.
This is your capital accumulation bucket. It sits in a high-yield savings vault, completely decoupled from your primary debit card. Its purpose is to build the down payment for real estate assets or to fund heavy equipment and software infrastructure for your business. It's a strategic reserve designed to sit quietly until an asymmetric market opportunity presents itself. The fourth container holds 10% for your skill optimization fund. This is your personal research and development department. If you want your economic value to scale, you must treat your brain like a technological asset that requires constant firmware updates. You use this fund to buy highly specialized courses, attend industry masterminds, purchase raw data tools, or hire private consultants who have already solved the specific operational bottlenecks you are currently facing. The moment you stop investing in your skill stack, your economic value begins to decay due to market competition and automated systems. The fifth container allocates 10% to targeted distribution. This is capital directed outward to expand your local network, support your immediate ecosystem, or fund strategic leverage through alignment with key individuals. It creates goodwill and builds a reputational layer that acts as a buffer during market downturns. The final 10% goes into your play account, and this is the component that most rigid financial advice gets completely wrong. Most traditional financial coaches tell you to live like a monk, cut out every ounce of pleasure, and suffer for 40 years so you can enjoy wealth when your joints are failing. That strategy violates basic human biology. When you suppress the reward center of a human brain for too long, the subconscious mind rebels. Eventually, after months of extreme restriction, your brain experiences a dopamine crash. You look at your screen at midnight, say, "to hell with it," and spend thousands of dollars on a compulsive luxury vacation or a useless high-end tech gadget, completely destroying your progress. The play account is your physiological pressure release valve. You are required to spend this 10% down to zero every quarter. You take that money and spend it on experiences that signal absolute abundance to your internal nervous system. You book a night at a luxury hotel, eat at a high-end restaurant, or buy the premium tier of a service you use daily. This is not reckless spending. It's a controlled demolition of your scarcity mindset. It trains your brain to associate the friction of hard work with tangible, immediate sensory rewards, reinforcing the habit of wealth generation without triggering an uncontrolled spending binge. You might argue that this system only works if you are already clearing 6 figures a year. That's a fundamental misunderstanding of behavioral algorithms. The habit matters infinitely more than the raw math. If you can't manage $100 using this precise allocation architecture, you will absolutely mismanage $100,000. The physical amount changes nothing about the underlying behavioral pattern. Whether you're splitting a $50 side hustle payment or a $10,000 corporate bonus, the ratios remain locked. You must prove to your own behavioral data stream that you can handle the resources currently under your control before the market will ever allocate a larger volume of capital to your position. Let us look at the second major behavioral defect keeping the corporate masses broke. They scale their input linearly while expecting non-linear rewards. They focus entirely on their bi-weekly working income instead of tracking their absolute net worth. Your salary is a vanity metric.
If you pull in $20,000 a month, but your lifestyle requires $20,000 a month to sustain your social status, your economic velocity is exactly zero. You are a highly paid clearinghouse for your landlord, your car dealership, and your local luxury grocery store. True economic leverage is measured exclusively by what stays behind after all liabilities are stripped away. Think of your net worth as a cold, objective balance sheet. If you were to sell every piece of technology you own, liquidating your brokerage accounts, emptying your checking balances, and casting off your physical possessions today, and then completely paid off every outstanding credit card balance, student loan, and auto lease, what is the exact number left over? That number is your real financial weight. To systematically scale this metric, you must build a physical tracking mechanism. Take a digital document or a physical whiteboard in your office. Draw a simple vertical axis. At the base, write your current true net worth, even if that number is currently deeply negative due to consumer debt. At the absolute summit, write your ultimate financial escape velocity number, whether that is $1 million or $10 million. Every single month, on the exact same day, update your position on that line. What the human brain tracks, the human brain automatically optimizes. When you force yourself to visually confront the flat line or growth of your net worth month after month, your subconscious mind begins to alter your daily micro-decisions. You start viewing expenses not through the lens of temporary satisfaction, but through the lens of balance sheet degradation. This structural shift requires you to master the difference between true assets and deceptive liabilities. An asset is a mechanism that deposits capital into your account without requiring your physical presence. A liability is an entity that drains capital from your account under the guise of status signaling. The mass market is explicitly trained to buy liabilities while believing they are secure investments. They buy a brand new vehicle on a high-interest lease because it makes them look like an executive in the office parking lot, completely ignoring that the asset depreciates the moment they drive it past the security gate. They buy oversized consumer goods on installment plans, bleeding their monthly cash flow dry through 1,000 tiny financial cuts. The wealthy individual focuses on a completely different game. They collect assets like a corporate entity collects intellectual property. They channel their surplus capital into cash-flowing digital properties, automated distribution pipelines, or automated market instruments. They look at a $100 purchase and do not see $100. They see the compounding future value of that $100 if it were locked inside an asset engine for the next decade. To accelerate this wealth accumulation, you must permanently destroy the cultural programming that tells you to think small and minimize your footprint. There is an immutable law of economic compensation. Your income will always match the scale of the human problems you solve and the total number of individuals impacted by your solution. Most people choose to play incredibly small within their local ecosystems. They choose to stay inside their narrow corporate boxes, executing predictable tasks inside a single company, serving a single boss. They do this for two reasons. First, they are terrified of visible failure. If they try to build a massive system publicly and it collapses, their social status within their peer group will be completely obliterated. Second, they suffer from an internal imposter algorithm. They look at industry leaders on global platforms and tell themselves that they are fundamentally different, that they lack the genetic or social wiring required to make a massive dent in the market. Look at how a standard local service business operates compared to a modern digital infrastructure. A local corporate trainer might specialize in teaching small groups of 15 corporate employees inside a single office building. They charge a fixed fee for their time. Their income is instantly capped by the physical constraints of the clock and the geography of the room. Now look at an enterprise builder who takes that exact same knowledge, structures it into an automated digital system, and deploys it across a global network via automated distribution channels. They are delivering training to 50,000 people simultaneously across multiple time zones while sleeping. The baseline knowledge is identical. The execution format is completely different. The second individual is leveraging the non-linear power of modern internet infrastructure to impact thousands of lives at scale. If you are only solving problems for one person, your boss, your income will remain constrained by that single point of failure. If you rewrite your operational thesis to ask how your unique skill stack can solve a high-ticket problem for 1 million people, your income will naturally scale to match that ambition. This brings us to the ultimate behavioral barrier that holds highly intelligent corporate professionals back from ever achieving independence. They have a deep subconscious revulsion towards self-promotion and sales. They look at marketing as something inherently dirty, manipulative, and low status. They pride themselves on being quiet executors who let their work speak for itself. That is a romantic lie that will keep you trapped in a cubicle for the rest of your natural life.
In the real economic arena, outstanding work that remains hidden inside a private drive is completely non-existent. The market does not reward the best internal execution, it rewards the execution that is most visible and effectively communicated. Think about the sheer irrationality of this anti-promotion bias. If you possessed a verified, laboratory-tested cure for a terminal illness and you met someone suffering from that disease in a local coffee shop, would you stay quiet out of politeness? Would you refuse to mention the cure because you didn't want to seem pushy or sales-oriented? Would you stand there silently and wait for them to magically read your thoughts? Of course not. You'd grab them by the shoulders, look them in the eye, and force them to understand that you have the solution to their suffering. If you genuinely believe that your skill stack, your digital product, your consulting service, or your software system can radically optimize an online business or solve a major pain point for a corporate team, then withholding that solution because you are too shy or too cool to market yourself is an act of extreme selfishness. You are letting potential clients suffer through operational inefficiency because you are terrified of a temporary moment of social discomfort. Promotion is not manipulation. Promotion is the act of connecting an active wound in the market with the specific surgical tool required to heal it. Even the most recognizable financial authors in the world explicitly state that they are not best writing authors, they are best-selling authors. Your technical talent is completely useless until it is matched with an aggressive, systematic distribution network. You must stop viewing your career options through the toxic lens of binary either-or choices. The mass market is completely obsessed with false dichotomies. They sit in the corporate break room, munching on free donuts, and complain that they have to choose between making a high income and being genuinely happy. They tell themselves that they can either build a massive scaling business or be an attentive parent. They believe they can either have deep spiritual peace or cold hard financial power. This is a massive cope designed to justify mediocrity. It allows people to feel morally superior about their lack of financial progress. They tell themselves that they are broke because they chose to prioritize their family or their mental health, implying that anyone who has scaled a massive balance sheet must have sacrificed their soul in the process.
The high-performance individual completely rejects this binary framework. When faced with a choice between two high-value options, they never ask which one they should select. They ask one specific question: how can I secure both? They understand that the universe operates on a baseline of massive abundance, not scarcity. If you believe you have to choose between a thriving career and a healthy physical body, you will automatically allow your health to decay the moment your workload increases. But the moment you pose the question of how to balance both to your subconscious mind, your cognitive engine begins searching for creative architectural solutions. You start scheduling your workouts precisely during internal corporate blocks. You replace passive meetings with walking audio calls, and you build automated workflows that protect your personal boundaries while maximizing your professional output. You can have both wealth and deep personal alignment. You can have a hyper-profitable digital enterprise and an elite physical baseline. Stop letting the small-minded compliance of the masses convince you that suffering in one area is the required price for success in another. Look at how the average person reacts when they see someone operating at the absolute pinnacle of financial performance. When a pristine, custom-engineered sports car pulls up to the valet at a high-end venue, or a massive estate is featured in a design magazine, what is the default response of the crowd? It is instant, visceral resentment. They immediately roll their eyes, whisper to their peers, and formulate a narrative to protect their own ego. They tell themselves that the individual must have inherited their wealth, cheated their taxes, engaged in illicit transactions, or stepped on everyone around them to reach that position. They project greed and dishonesty onto the high performer without possessing a single piece of real data. This behavior is a form of psychological suicide. The human brain is a highly complex, pattern-matching machine.
It is structurally impossible for your biological system to actively attract an outcome that you constantly despise and mock. If your internal narrative frames rich individuals as parasitic, arrogant, or unethical, your subconscious mind will actively sabotage your own financial growth to protect you from becoming the very entity you hate. It will prevent you from asking for that high-ticket retainer. It will stop you from launching that product, and it will ensure you find a way to burn through your savings so you can maintain your identity as a morally pure, struggling worker. You must completely shift your internal algorithm from resentment to deep study and appreciation. When you see someone clearing $500,000 a month on a software tool or landing an elite promotion, look closely at their system. Study their distribution framework. Analyze how they structured their offer. Wish them massive continued success and tell yourself that their achievement is a definitive proof of concept that the system works. Bless that which you want to create because you can never build what you constantly hate. Let us dissect the primary operational engine that drives real financial independence, decoupling your compensation from your physical time. The mass market is completely addicted to trading hours for fiat currency. They show up at 9, log into their corporate portals, click around on various tasks until 5, and expect a fixed deposit every 2 weeks. This creates a hard ceiling on your potential output. No matter how intelligent, efficient, or capable you are, you only possess 24 hours in a single solar day. If you must be physically present for a task to yield $1, your financial capacity is completely linear. You have built a cage where you are the primary asset and the primary bottleneck. The wealthy individual works exclusively for results, equity, or percentage-based leverage. They want to be compensated based on the sheer scale of the value they deliver to the system, not the number of minutes they sat in an office chair. Think about an enterprise consultant who approaches a brand and offers to overhaul their digital infrastructure. If they demand a $4,000 monthly flat fee for their time, they are capped. But if they approach that same brand and say they will rebuild their customer acquisition pipeline for zero upfront cost, but will retain 50% of every dollar generated above their previous historical baseline, their upside becomes theoretically infinite. If they build a highly optimized system that generates an extra $100,000 for that firm, they walk away with $50,000 for a fraction of physical output. The low performer rejects this model because they are terrified of risk. They want the safety of a guaranteed salary, even if that safety means they are giving up 90% of the real economic value they produce for the enterprise. If you want to break the cycle, you must negotiate performance incentives into your current contracts, transition to a retainer model that charges for specific deliverables rather than hourly blocks, or build an independent digital venture where your revenue is entirely tied to the transaction volume your software or media controls. To sustain this transition, you must become incredibly aggressive about tracking your inputs and aggressively pruning your local network. Your brain is an open terminal that constantly downloads the behavioral patterns, vocabularies, and risk tolerances of the people you interact with most frequently. If you spend your weekends hanging around individuals who constantly complain about their corporate bosses, gossip about their peers, play small-stakes games, and spend their surplus cash on expensive nights out to forget their misery, you will inevitably adopt their exact financial trajectory. Success is a highly contagious behavioral pattern, and so is mediocrity. If you sit in a room filled with 5 people who are constantly launching new digital architectures, optimizing their operations, and testing new acquisition models, it becomes culturally impossible for you to remain stagnant. You are forced to level up your language and actions just to survive the social context. If you look around your immediate physical environment and find nothing but people playing small games, you must cut the cord immediately. This does not mean you cause a dramatic social scene. It means you quietly and strategically redirect your time. Replace passive local socialization with high-value digital inputs. Spend your hours reading deep architectural breakdowns written by elite operators, watching granular technical interviews with founders who have built nine-figure enterprises, and studying the operational scripts of top-tier creators. Your brain doesn't know the difference between an in-person conversation and a deeply immersive video or book. It absorbs the mental frameworks regardless of the medium. If you want to fly with the giants, you have to stop swimming with the compliance-driven masses who treat their jobs like high school extensions. This brings us to the root architectural division between the independent elite and the corporate dependent. It is the dichotomy between ownership and victimhood. The average worker operates on a deep, unexamined belief that life is something that happens to them. They believe their financial baseline is determined by the Federal Reserve interest rates, the mood of their corporate vice president, the current state of the tech job market, or the socioeconomic status of their parents. They view themselves as an isolated leaf blown around by a massive global economic storm. When you slip into this victim state, you automatically trigger three catastrophic psychological mechanisms that guarantee your poverty. First, you engage in constant, chronic blame. You blame your industry's saturation, you blame your company's toxic culture, or you blame your lack of venture capital. Second, you construct elaborate rationalizations to minimize the importance of capital. You sit on social platforms and type out long paragraphs about how money isn't everything, completely ignoring that money is the structural oxygen that funds your medical safety, your geographical freedom, your
educational access, and your ability to protect the people you love when a crisis hits. Third, you become a professional complainer. Complaining is the act of actively training your reticular activating system to hunt for flaws, bottlenecks, and setbacks. You become a literal magnet for bad outcomes because your brain is optimized to find data that validates your victim status. The high performer operates on a fundamentally different axiom. I am the sole architect of my economic reality. If an offer fails, it is not because the market is bad. It is because the offer lacked a compelling transformation mechanism. If a business partner burns them, it is not because the world is filled with dishonest people. It is because their internal due diligence protocol was lazy and unscientific. When you take absolute, unadulterated ownership of every single metric on your balance sheet, you suddenly claw back your personal power. If you are the reason you're broke, then you are also the exact mechanism that can fix it. You stop waiting for a manager to notice your hard work or a politician to alter your tax bracket. You simply look at the market gaps, build the required assets, and force your way to financial escape velocity through raw execution. Look at how this manifests in the daily goals people set for themselves. The average corporate employee aims for comfort and baseline survival. Their major financial goal is to have just enough liquid capital to clear their monthly bills, pay off their lease, and have a little left over for a standard streaming subscription and a weekend dinner. When your stated intention is to merely survive, the market will give you exactly enough to keep your head above water, leaving you completely vulnerable to a sudden corporate layoff or an unexpected health event. The middle class aims slightly higher. They aim for what they call comfort. Comfort means you can walk into a mid-tier restaurant and order an item without looking at the price on the right side of the menu. But comfort is a massive trap. It keeps you compliant. It makes you terrified of taking risks because you have just enough luxury to lose. You become dependent on the corporate hand that feeds you, trading your grandest life ambitions for a steady health insurance plan and a predictable bonus structure. If your objective is true wealth, your targets must be radically larger. Wealth does not mean comfort. Wealth means the absolute eradication of financial dependency. It means setting targets so large that they force you to completely redesign your internal human software.
You must determine the exact dollar amount required to fund your absolute dream life, down to the exact monthly operational cost of your ideal assets, your global travel schedule, and your philanthropic investments. Write that number down, make it your central focus. When you shoot for absolute financial escape velocity, even if you miss your target by 50%, you will still land far above the highest ceiling of the compliant middle class. Most people fail not because they aim too high and miss, but because they aim at the floor and hit it perfectly every single day. To achieve these targets, you must move from merely wishing for wealth to being fanatically committed to its realization. There is a massive structural gulf between wanting something and executing a commitment. If you ask a room of 100 corporate workers if they want $1 million, every single hand will go up. But if you analyze their real behavioral data, their actions reveal that their desire is nothing but a passive fantasy. Deep down, they have highly conflicted internal messaging. One part of their brain wants the freedom of wealth, but the other part is completely terrified of the required inputs. They do not want to give up their weekend leisure time. They do not want to endure the intense cognitive strain of learning advanced programmatic skill stacks or automated marketing frameworks. They do not want to risk public embarrassment. So they remain frozen in a state of continuous wishing, waiting for a lottery ticket or an unexpected inheritance to save them. Commitment means you completely eliminate any alternative outcome. It means you are willing to look at your calendar and systematically eliminate non-essential social distractions, hobbies, and comforts for a targeted season of high-intensity execution. It means you are willing to work 16-hour blocks, manage complex project pipelines under high pressure, and push your system to its absolute biological limits because you understand that temporary discomfort is the exact capital investment required to purchase permanent geographical and chronological freedom. The universe operates exactly like a premium establishment. If you walk into a premium clothing venue and tell the clerk you want an elite item, but you are only willing to pay 20% of the price on the tag, they will escort you out of the building. The market doesn't care about your desires. It only cares if you are willing to pay the absolute non-negotiable sticker price for excellence. This requires you to reprogram your brain to become an unyielding opportunity hunter instead of an obstacle collector. The mass market is completely optimized to find reasons why an enterprise will fail. You present them with a breakthrough digital business model, and they will spend 3 hours explaining why the market is too saturated, why the platform regulations are too restrictive, or why the technical barrier is too high. They engage in chronic over-research, reading thousands of forum threads and white papers, trying to build a perfect flaw-free plan before they ever take a single action. This is a psychological defense mechanism called analysis paralysis. It allows them to feel like they're working while completely protecting them from the risk of real-world failure. The high performer understands that perfect information does not exist in an active economic arena. They conduct just enough high-level research to verify a core baseline thesis, and then they immediately get in the game. They launch the minimum viable version of their software. They deploy their raw offer to actual prospects, and they drop their media assets directly into the public feed. They trust their biological system to adapt, pivot, and solve operational problems in real time as they arise. You can never see the entire length of a mountain trail from the base of the peak. You only gain visibility to the next 100 yards by actively walking forward into the fog. Stop trying to build a perfect plan from the safety of your office desk. Launch the offer, look at the brutal feedback loop of the marketplace, and optimize your systems on the fly. Action yields data. Thinking only yields doubt. To survive this high-velocity execution, you must become structurally larger than the problems your enterprise faces. Scaling an asset engine is not a peaceful walk in a well-manicured park. It is a continuous, high-stress combat scenario filled with sudden platform changes, legal friction, client churn, and technical infrastructure meltdowns. The weak operator views these setbacks as an indication that they should quit. They hit a major technical bottleneck or receive a critical review from a high-paying account, and their nervous system completely collapses. They spend 3 days paralyzed by anxiety, wondering why everything has to be so difficult. This is a fundamental error in scale calculation. The problems of the market do not disappear when you make more money. They scale with your net worth. A Level 2 operator facing a Level 5 corporate bottleneck will feel completely overwhelmed because the obstacle is larger than their current internal capacity. But if you commit to daily psychological and technical growth, turning yourself into a Level 10 operator, that exact same Level 5 problem becomes a routine task that you delegate to an automated script or a virtual assistant without your heart rate ever elevating. The size of the market obstacle is completely irrelevant. What matters is the capacity of the human container handling the obstacle. The larger the financial responsibility you can manage without cracking.
Stress. The larger the capital allocation the market will naturally route to your position. Your net worth can only grow to the exact limit of your personal development. Ultimately, this comes down to your ability to execute high-impact actions in spite of deep visceral fear and discomfort. True operators are not fearless individuals. They feel the exact same heart-pounding anxiety, the exact same imposter syndrome, and the exact same dread of failure that paralyzes the masses. The difference is entirely in how they handle that internal chemical state. The average person treats fear as an absolute stop command. They feel a wave of anxiety about pitching a $100,000 enterprise retainer, so they back down and send a weak email instead. They feel uncomfortable cold calling an industry decision maker, so they refresh their social media feed for 4 hours instead. They let their internal chemical algorithms completely control their physical movements. The elite wealth builder treats fear as a trailing indicator that they are moving in the exact right direction. They understand that every single breakthrough in their net worth sits directly on the other side of a deeply uncomfortable conversation or an aggressive professional risk. When they feel their throat tighten and their hands sweat, they do not run away. They recognize that their biological algorithm has just identified an opportunity for massive growth. They tame the fear, step directly into the arena, and execute the protocol regardless of their emotional state. They train their system to become completely comfortable with being uncomfortable. They ask for the promotion that feels slightly out of reach. They raise their pricing models to a level that makes their stomach churn. And they cut out low-performing legacy assets, even when it causes short-term friction. Stop waiting for the day when you feel completely confident and ready to take action. That day is a psychological illusion. The confidence you seek is a consequence of repeated execution, not a prerequisite for it. Reroute your financial destination starting today. Audit your primary checking account. Set up your automated allocation machine across your banking infrastructure and visually map your net worth on your office wall. Commit to treating your career as an active engineering laboratory where you are the primary technician and the ultimate beneficiary. Stop playing the small games designed by the compliance class. Scale your skills, automate your inputs, and claim the absolute financial freedom that your execution deserves. Use this blueprint as your starting parameters. Lock in the protocols and let the compounding algorithms take care of the rest.